see, there's this thing here. Okay. Right out. Okay, here. So here's a silver chart I put on Twitter, guys, a little while back. We were down. I think we were over here consolidating right there. It's the 8-hour candle chart. You know, if you guys want some fast reaction times, and I just had this possible longer term rising support line because somebody said, "Hey, Patrick, can we get $40 by the end of the year?" I forget. Somebody called the $40 by the end of the year. So when I hear that, what I do is, okay, well, let's see if it's even visibly possible, right? So you draw a rising support line, you put the date, or somebody wanted to know by July, maybe. So this is July. And we were down here. So I said, so my reasoning was, as long as the price stays above this rising trend line, there is the price could go, whatever, it could go like this and then up. So it's a possibility we hit 40. But now, like you said, it's stretched. Look at these pull, flag, pull, flag, pull. And this pull is much longer than the previous one. Like usually it's a measured move. So yes, it is stretched. And now it 100% has started correcting from this very acute, this is probably going to be a longer pull flag. It's correcting right now, silver. So I have a line here that's starting to morph into existence. And that's my correction zone. That's how the way you should see it. It's there's an area here. I just don't know. Goodness, Pat, there. I just don't know how it's going to look like, where like the price is going to start moving in there. But I know that my next opportunity will probably be above this black line. So whatever it does, let's say the price goes there. I don't know. It goes down here. We don't know, guys. You know, like we always want to say it's never going to go down, but I'll show you an indicator after that. I'll show you it is stretched silver. And this is probably the next lower risk entry is once we crossed a meaningful, the descending line, preferably a horizontal line, if ever one morphs into existence, like above 3650, you could wait for that. And that's probably going to be a crazy move if that breaks out. It will be a pull flag added to the breakout line. And it's like building blocks. And then that brings us a little closer to the $40 target. And then, of course, same thing again repeats, guys. You could have a flag here, it can go up in a straight line non-stop. And here, I'll show you guys. I'll put the distance for moving average on the 8-hour chart. It should pop up here at the bottom. What I like to do, Andy, is I put a line on the distance for moving average, and I like to see how many times statistically I was able to touch that line. I'm zooming out just to get a higher sampling rate. I'll zoom out. You'll see that pretty much every single time you look at my cursor, like every time you touch that line, you come close to a top and it starts rolling over right here. That peak, this was a crazy peak. And look, reaching that distance from moving average, extreme FOMO that we must have had back in, what is that, 2024, in May of 2024. Look at the time silver went sideways there to correct. It took time for it to heal from that euphoric melt up. And then the low risk entry was here. But after that, another peak here. See where the price had to go sideways again. It's mathematical, right? And then after that, when the price resets, nobody believes in silver anymore. And guess what? That's when you should start looking at it. The price is coiled and tight to its shorter-term moving average. That, guys, the bottom pane, distance from 36-day moving average, it's the distance. I'll remove the cloud. It's the distance from that red line. And look at this. Look how stretched we got here. My goodness, right? Crazy FOMO. So stretch, historically, you got to expect that the correction, you're going to get a correction. And I'll show you something here. You know what? I'm going to remove that. That's in the way. I'll remove that. I'm going to put a vertical line right where it started falling apart, the distance from moving average. Check this out. So I have a rising trend line here. I'm going to zoom in. So I'm losing rising momentum. So I'm going up. It's fine. Now I can't keep going up. I'm losing that rising trend line. And now after that, I lose a horizontal line. And guess what? Look where the price, zoom in on the price, guys. And that's it. Even when the price was going sideways, I was losing momentum. I'm not able to distance a moving average as much. So it's like I'm running uphill, Andy. I'm trying to always find a better and better analogy. And I'm just the hill's catching up to me. The angle, I'm just too slow. I just can't make it over that hump. I can't run and distance myself. And guess what? Well, you falter. And look, price goes sideways. And because price goes sideways, the moving average, right, it still goes up because it's dynamic every time there's a new price point. But because the price points aren't higher and higher than the previous 36, right? You take out the first one, you add one, then it's resetting the momentum, it's resetting the FOMO. So the longer this correction lasts, the better it is, because this line here, whenever the price starts re-accelerating upwards, it's going to start distancing itself away from the moving average again, and that's a low risk entry. Look at this, Andy. You see how cool and tight it was? Look at that low risk entry here.
Yep.
And that created a huge opportunity, right? It had so much fuel to go up right here. So the lower it goes, people like, I know they want the moon all the time, but I'm going to draw here just to show you where that moving average might go. The closer the price gets to that moving average before breaking out, the better, the lower risk the entry will be, and the more chances we have that that next move will actually go up to our target. So yeah, it's silver's cooked on that time frame, guys. It's like, it's always about time frames, but that 8 hours is kind of short, but it's fun for those traders who want to know when to add. You can't add now. You don't add now. It's the correction has 100% started. What I could tell you is, will that correction last longer? So what you do is you zoom on the daily chart, and then you do the same exercise, remove all drawings, and look at the daily chart. Was it stretched on the daily chart? Yes. Look how stretched it was. It could get stretched more, but we're starting to get in that outlier territory. So getting stretched is one thing. What then you got to be scared of is, am I losing rising momentum, rising trend line? The answer is yes. So that means it's starting to slow down already. And here the correction has started on the daily. I don't know quite where that line is going to be, but it's always the same thing. And you got to let that moving average catch up. You got to let everything reset. And the low risk entry right now is not there. And you'll see here, look at that beautiful pull, flag, target reached. It repeats, rinse and repeat. It's always, it's the basic constructs of any upwards move or downwards move. It's you go up, and then after that slows down, profit taking, whatever. And after that, you decide. So right now we're right there at, again, a consolidation on the daily chart. Highly has started. When I see the momentum, has the correction started on the weekly, right? It has not. So this is where the longer term bullish guys, the people that now weekly, monthly charts, you're starting to go into like the stacker. Well, stackers, they don't care, they buy anytime, but you're starting to get into people who buy it longer term. You still have this crazy breakout here for silver. It's done, it's in the bag, and the correction has not yet started. So if that correction persists on the daily chart, eventually the distance for moving average from the 36-week moving average, see, it's a beautiful breakout like this. If somebody didn't care about the daily jiggles, who cares what's happening today for you guys? It hasn't impacted yet the weekly time frame. But if you're a weekly time frame guy where the moves could last, you're going to hold it for many months, maybe a year if this thing really trends nicely. There's nothing yet. It's a nothing burger, right? There's no correction yet. Nothing's happening right now. It's just going sideways for a week or two, but there's no prolonged correction to anticipate on the weekly. And there's still fuel. See, look on the weekly. Am I stretched, Andy? I'm not stretched very much, right? I'm still down here. I'm able to see, if I stretch back, I'm able to get much further away before I really hit some resistance, right? So this is really kind of the beginning of the move on the weekly. Here's the monthly. Oh, look at that. The monthly, possibly a breakout again, an aggressive breakout. They're kind of I see those like popping pimples there. It's like a volcano. Because it's a rising trend line. It's kind of tricky because often they resolve downwards because you can't make a higher high. They can make higher highs, but it's like you're getting squeezed out. Often these wedges, you go down. But when you see those, sometimes they just create a crazy melt up move on the onset of that. But We need the monthly close. What are we? There's still 2 more weeks, Andy, in the month. If the correction on the daily persists and it cascades on the weekly, maybe we'll close below that line there by the end of the month there. That's why always wait for a candle close. And you'll see on the monthly, I'll remove these lines here. I'm right here at a wall there. So I'm not that stretched. We were previously, you were able to stretch more. That looks like a breakout, pull, and flag here. And if ever we break out of this, we were able, on the distance from the 36-month moving average, if we're able to close above that, then we should have a crazy explosion that goes all the way up here. And that will bring the price 69% above its moving average. I'm going to put my measuring tool. That's a 36-month moving average. What did I say? 69%. And look at that. That will probably be, if we get the breakout here, I'm just going to anticipate. Just imagine where that line could, maybe it's even more severe. If ever we get that breakout, that's probably going to be the move that brings us back to 48 there.
Got it. So really, the bottom line is on